Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you guys this morning. Eileen, what a world, what a world. It says Wicked Witch of the West, Wicked Markets. I hope there's a good wicked, Eileen. Man, it's hard to sit on the hands and not chase. Yes, it is. And certainly we've gotten some runaway trades, which just have continued. You're looking at the dollar right now. I mean, look at this decline. Obviously, the largest decline that we've seen, just eyeing it out probably since the initial August drop. But in any event, coming into that channel support, trendline support, whatever you want to call it, what is that, off the lows from May. And certainly that's coming into focus right now. It's the same slope. All of this is the same dominant slope. I'm sure you've seen Jamie's charts too. We're coming into some support here. Still looking lower, but I do just want to highlight this one confluence area. You have basic trendline support, the 618 retracement of the advance off the October low, and you also have that trend line all in this region, just around 12,027. Let's stretch it from 12,020 into 12,025, basically, or 12,030 even. This region right here, we're heading into it now. So just keep that in mind. Also, one thing to note, this is the first time that we're seeing momentum. If we close here today, dip below the 40 threshold, again, very suggestive that we're seeing a larger shift in broader momentum. We did just get the release of the weekly jobless claims. Here's what that looked like. Slightly worse than expected. Tomorrow's non-farm payroll is really going to be the big player. Also today, before that, we do get factory orders at 10 o'clock in durable goods. Non-durable goods, specifically ex-aircraft and all this, very good gauge of business investment. This is the final read for December. So unless there's a deviation from what we got last month, don't expect too much data on, or too much volatility on this. Relative performance against the greenback, shouldn't be too surprised looking at the index. Looks like this. You can see that it's weaker against all its major counterparts. Biggest winner, euro dollar, up 1.18%. Kiwi was a sneaker and overnight trade. We highlighted that on the scalp charts last night. That rallied 1.17%, and Aussie with a gain of 0.99. Sterling's been a little bit of a slow burner lately. We put out a piece on daily effects on that yesterday and highlighted it here last night. We'll also take a look at that, as well as the Aussie crosses that we've been following. So, as always, guys, feel free if there are any questions or trade setups that you want to review throughout the course of this session. Permendra, great to see you in the room. Graham says, good morning, Michael. Here in the UK at the London Open this morning, saw 3-point triggers to short the dollar with sensible stops on all the major pairs. I failed to bet the house and so unable to retire. Therefore, I'm back with you again on SB Trade Desk here today. It's going to be frustrating when you miss them, right? But listen, sometimes you don't use enough leverage. Sometimes you use too much leverage. I'd rather err on the side of caution. So I hear you with that. Specifically, when you have so much conviction on a trade, sometimes you wish, the position was larger. In any event, we'll look for plenty more opportunities here as we head into the close of the week and non-farm payrolls tomorrow. And don't forget, we're just setting up the initial February opening range. So try to keep some powder dry as we get deeper into the month. All right, let's jump right in. First things first, let's go over the actual update from last night on the euro dollar. So here's what euro looked like. I just wanted to give you guys an update. If you remember the previous day's report, which always is linked for you right below, guys. The previous day's report, we were talking about looking for this consolidation break, which was imminent in the euro dollar. You didn't get much pullback. It just broke to the upside, which was our favorite break, took out targets at 109.83. This was a big target for me, 110.59, 110.45. This was big. And here we are coming into that 111.20 barrier as we closed out trade yesterday or last night. So the focus was still constructive in the trade while above that 100-day moving average. We were looking for a pullback here to get on the long side. Didn't really get one. The thing just kind of popped right through. Here's what euro dollar looks like at this point. All right, so the pullback didn't come into the support barrier. Ideally, this thing would have come back into that 110.58 level and given you a topside trigger. There was a trigger that gave out, but that was on the initial break, not on the break of this last formation. This was way too steep to try to look at. Long story short, the subsequent two targets at the top side you're just about there now. 112.13 got taken out. Next is 112.52/63. And that's this Fibonacci confluence right here. You're basically looking at the 764 retracement off the low, and this is 100% extension off a 764 retracement off the high, excuse me, and this is 100 extension off the low. So coming in some resistance, still see some upside. One thing I want to note, guys, is this. Make sure that on big moves like this, our strategy needs to be much more reserved. Why? Because when you get these hangover effects, I like to call them, from big stretches in market volatility and big surges in market volatility. If you guys saw yesterday's swing update from Jamie, you can see the high volume bars that really blasted through on this break to the upside. Really gives us conviction to maintain the bias, but there's not much back and forth. So to try to scalp it, a lot of these trades, guys, you're going to end up chasing. And I'm going to be completely honest with you. I haven't taken a position since last night. I'm kicking myself, and I wish I was in this, especially on the euro long, because we were looking for that. But doesn't mean I'm going to take a reckless move and start jump in trying to chase. So be cautious here. We do have major event risk on tap tomorrow as well. And with regards to the non-farm payroll report, the risk right now is really not the employment figures, and the Fed is not focused on employment. They have a dual mandate right now: fostering maximum employment, which quote unquote is basically there now, and price stability, i.e. inflation. And of the two, the laggard across the globe, I might add, is this deflationary environment or lack of inflation. So it's going to be very difficult for the Fed to justify any types of rate hikes moving forward, especially on the back of what's going on around the globe with everyone else easing. You got the BOE, which we'll talk about in a moment, that came out today, with a little bit more of a cautionary note as well. So as far as the dollar trade is concerned, those interest rate expectations getting kicked out much further are going to continue to see a soft dollar. That being said, dollars at support or eyeing support just lower. Euro dollar eyeing resistance just higher. 112.52, 112.64 is the first major target here for the euro. So we're looking for pullbacks to get on the long side. We're looking for long triggers. As long as we stay above 111.20, we're going to go ahead and raise that bullish invalidation level to that 111.20 region. Big confluence. Again, former basic trendline support. This is off the lows from last year. Support, support, break, resistance, resistance. Now support again. The former upper median line parallel for this formation. And the 618 retracement of this decline. So a big area of support. This is where you look for a pullback to find initial support. We're going to stay constructive above, broadly speaking, above that 200-day moving average. Eileen says popped. Yes, nothing really pulling back to get in. When the move's so strong, it's difficult to gauge how far pulling back to get in. No back and forth, right? Yeah, and again, that's where we need to be more reserved. Like you said, Eileen, I love that line. You got to sit on your hands a little bit. Again, this, we can't be reckless with this and start to chase. I do think you have more to go. I do think you can get a pullback before you do, but long story short, the bias remains pretty strong here, and I think it's a pretty major valid breakdown in the dollar that we're seeing. On euro, why did you start the fib from the October high instead of the September high on that daily chart, right? Okay, again, this is going to be that major stretch high that we made on August 24th and that really emotional spike high day. And second of all, this in and of itself constitutes one wave or a leg, let's call it, down, right? And we just want to see when the latest, most recent directional decline is. A lot of times to figure out where you want to take your fibs from also, Eileen, it might help to bring it into a line chart and just see what the next operative move is. So this, I would constitute this as an area I'd want to take a retracement on this decline from this low. As we dropped into here, this is the retracement you want to take, right? As you drop into here, while this is dropping, you're looking at the retracement from the low to the advance. Now that we've made this low, I want to take the most conservative approach, and that's just the last major peak that we made. You know what I mean, Eileen? So we could do this, and certainly I'll have that on there as well, okay? But I'd rather be catching targets a little bit earlier and being a little bit more conservative. I noticed that that 618 had crossed over a major confluence of longer term median lines and basic trend lines. So when you have that confluence, just offers more conviction. She says, well, then why not from the December high? Well, why not from the December high? What do you mean? This retracement? This retracement, we were working with it until we broke through. Eileen, so the initial scalp for the euro was working with this retracement. That, once we broke the high, now you're invalidated. Now you're looking at the larger move that you're trading within. Good questions, but I want to make sure we're hitting home here, that this makes sense for you. Oh, the confluence of those other touches, the price action two, and larger move. Right, right. The most recent drop, and you have to go back and look and see that price action has done something there. So the 618 gave us confluence resistance right here. The 618 also gave us support for the September swing and close lows. And if I keep going back, you can see there's been a decent pivot in price, right? So all these things help us to kind of gear our head towards, you know what, let's be a little bit more conservative. Let's use the most recent drop here. And again, these are going to, Eileen says, and I love the recordings to hear it again and again. No problem. These are good sort of drills to go through, definitely. So I hope you find that helpful. But in any event, on the euro dollar, any questions on this pair? Again, I want to stay constructive above 111.20. The trade is bullish, or the bullish invalidation. We're immediately focused higher against this, but the broader shift that would put us bearish would be back below 1045, 1058. This was big. You got the 200-day moving average in there, 100. What is that? Previous high. And the 618 extension off the low. Big, big region. Last night was trying to figure out where the targets might be and couldn't quite catch those. Yeah, it was hard to get in on this, specifically on the euro trade. Yeah, you're more than welcome. Appreciate that. So moving right along, the other setup from last night was the British pound. And this one, geez, I mean, the BOE today coming out, the only major difference that you saw in the BOE today was that the vote count was 9-0 instead of 8-1. Mr. McCafferty switching his vote to raise interest rates to the sidelines with everyone else on a hold. So here's what the British pound looked like last night. We were talking about this major key resistance confluence here in the pound as well. Remember one thing, guys, for the euro, and I'm sorry to keep jumping back and forth, for the euro, objectively, this is a break of the January range. The January opening range never broke. So objectively, aside from anything, the shift that we made here yesterday with the break keeps the focus to the upside, okay? For the British pound, you're not there. In fact, the British pound hasn't even approached the monthly open yet. The monthly open for the pound comes in at 147.31. So it's a little bit different of an animal here. We're still trading within that initial January, stretch to the downside. Long story short, near-term resistance is right here. And this is going to be the major ceiling you need to get through for further sterling strength. 146.55 into 146.88. And it's a little bit bigger of a region, but all important levels. 50% retracement of the most recent decline. The 2015 low day close came in at 146.71. And certainly a 1618 extension off the lows here comes in right at 146.88. So a big region of resistance here, big region near term for the sterling. Here's what it looks like on the 30-minute last night. And here's what it looks like now. So some major comments that we're seeing here, just some things I want to highlight from last night's, or this morning's rather, BOE interest rate decision. You know, beside the vote count, which certainly is a big deal, and I think why you saw the initial sterling decline there really dropped off. We were getting an 8-to-1 vote count with Mr. McCaffrey saying we need to raise rates. That moved to 9-1, meaning they're a little bit more cautious, but the commentary kind of rounded it pretty well. While the BOE did cut its inflation, or says inflation will be likely be below 1% throughout 2016, they also said that the MPC is ready to take action, any action needed on the economy, and says a rate increase is more likely than not over the 3-year horizon. Now, that's such a big, big pad, 3-year horizon, right? But the long story short is that slowing inflation is what brought McCafferty back to the let's hold on rates. So what did you get? You had some divergence here, and this is just something I highlighted this morning. Price action making a higher high, spike into that release. You saw a drop down and find support right at the median line, off the low. And then it rebounded right back into the highs again. So with the pound, I'm not quite as aggressive to the long side as I am on the euro, which has already cleared the January range. But for the pound, you really need to eye that 47.31, and that's what needs to break to validate a more concrete reversal in the British pound. Sterling, why did you choose those 3 points for the recent fib extension on the daily? I was studying that last night too. I couldn't figure out where you were thinking to use those points. So Eileen, it's the same as this. Look at it on the daily chart, excuse me, on the 30-minute chart, and it's the same points. It just looks different on the daily because the high and the low is using the same bar. Okay, so see this? Here's your 3 points. From the low that we made, the high that you made right there on the, was that 29th? And the low made on the subsequent same day. So on the daily chart, it looks kind of messy, right? Because this bar is using this points are using the high and the low for that same bar. Does that make sense? Gets a little tricky, I know. So, Mike, this is good. You told us what happened. What's going on from here? Okay, so from here, I'm looking for a pullback back to the median line again to get back on the long side. If this thing pops through 146.85, don't go chasing. Look for this rebound back into support to find some low to trade against before you try it again. Next topside target, which is really important past the 2016 open, would be 147.95. You're basically looking at 148. So you have the 618 retracement right here at 147.95. Sorry, guys, my computer's a little bit lagged here. And the 2013 low comes in at 148.12. So a big region of resistance if we do mount that 2016 open. Looks pretty good for the pound, though. That's this right here, guys, 148.12, 2013 low. It actually turns out being a 38.2 of the entire decline as well, but even more so, the 618 just from December. So this is when you want to leave these confluences on big, big region, just like we have right here. So ideal scenario, again, maybe one of these deals where it pulls back into support, look for some long exposure. If it ruptures from here, if you're not holding anything already, you gotta wait to get some sort of near-term pull before jumping in. Where did you determine 47.31? What do you mean by that, Eileen? Where's 47.31? Where do you see that highlighted? Oh, yeah, this is the 2015 Open. How far do you look back for the euro to pull back towards your long trigger now? So for the euro, for Craig, let's jump back right to that. We just finished talking about that. But for the euro, yeah, I mean, you have to bring this into the really close near-term charts. You can't do anything with a 30-minute once that's stretched out. Again, remember, guys, the oscillator only pegs when the candle closes. So by the time a 30-minute candle gets down here, the oscillator will be well below, but you can't do anything until that candle closes. So make sure you bring it into a near-term chart when you're trying to find exhaustion trades or counter trend trades, which is what we would be. I would be interested in possibly testing a short against 126, 112.60, 112.52 here. If we get that pop into the opening range for US, we kind of muddle there for a while, and we get a short trigger like this one, then I might be interested in possibly taking a stop or a trade against that stop high. Even then, I'd only be looking back for a pullback into a basic 236. I'd pull one of these deals. Okay, and a basic 236 would take you into, oh, that's not the right one. Sorry about that. Come on. And a basic 236 of that move takes you into like 111.60, same exact region, same exact region. Oh, I'm sorry, it's 111.60. So basically just above the high that you made there on that spike would be a first just initial target. If this thing does move into the highs here, gives us a short trigger and breaks lower. Again, it would be counter trend. I'd rather be waiting for a pullback to get long than necessarily playing the short. But if there's a clear-cut trigger as we head into U.S. trade, you know, you're looking at this 1-minute chart, you're seeing some divergence along the highs, price action makes new highs, the oscillator makes lower highs. Again, these divergence signals above 70 and below 30 tend to be your weakest. But nonetheless, it is something to take note of, excuse me. So if we see the breakdown start to materialize into the open of US, yeah, I think I can try to play a short, but you're better off looking for a long stretch from lower down. So does that make sense, Craig? How far back do you look for a long trigger? I'm not sure what you mean by that. I mean, you'd need to get either a pullback into some support of some degree before I try to do anything on the long side here, if you're not already in. Yeah, so Michael, friend, says, good morning, came in late. Are you gone over the euro dollar yet? Yes, we have. So here it is. It's our second time going over it, Mike. So let me know if you have any questions real quick, and we'll be happy to move on to the next pair. Craig says, thank you for that. How do you feel about tomorrow's non-farm payroll? So, Mike, I'll let you watch the recording on that, man. We kind of went to a quick discussion about it. Look, unless it's a real bad number, I'm really not expecting much, okay? If it's a real bad number or if it's a miss, the dollar is likely to completely get crushed, guys, crushed. Because interest rate expectations are already getting kicked out as is right now, okay? And if you get weaker than expected employment numbers too, on top of the fact that we're nowhere near the inflation outlook, yeah, the dollar is going to get murked. I mean, this thing will completely fall apart. Gary saying, hey, Mike, listening to Jamie last night was hilarious. Love his no BS commentary. He watched all the dollar pairs, and to quote his exact words, yes, I understand what he said. Do you share this view on the dollar fundamentals going forward? Gary, yeah, absolutely, man. Listen, there's times in trading where you second guess yourself, where you want further confirmation that a break is real, right? You've seen so many times in markets false breaks and reversal scenarios and things of the like. When you see a move like this, you got to be on board. You got to be in it to win it. Okay. Gary says you can answer. You can swear I won't tell. Says Gary. Do you feel like the wage growth numbers matters most? Michael, that's what's going to be the biggest impactor if the NFP number is sound. So let's take a quick segue here. It seems to be a lot of interest. Tomorrow's NFPs. Let's take a quick look at some things. So So heading into tomorrow's numbers, we're looking for a print of 190,000. Okay. The wage growth numbers, the average hourly earnings, this is what's going to be most important. We're expecting to see a nice pop higher to 0.3% year on year, 2.2, a little bit softer than the one we had previous. But if this number contracts or we don't see strength in the wage growth, that's going to be a major, major player because, again, inflation is the problem, guys. There's not enough inflation, period, and there's not enough wage growth. So if that starts to slow, you got the BOJ, which is doing more easing. You got the, China, which is doing more easing. You got a lot of concerns, RBA leaving the door open to more easing. And what? We're going to start raising interest rates when we have inflation starting to falter. And if the employment picture softens, it's really hard to see a scenario here, guys, where the dollar snaps right back and gets back into that 12,030 or 12,300 region anytime soon. When you see something like this, you want to believe it. My point being, Gary, and I think on this juncture, yes, the trend line here may offer some upside approach near term, may offer a near term recovery, but we're coming off of a pretty big region. And I do think failure to turn here ahead of the sliding parallel. I know Jamie talks to you guys about this. When you turn ahead of an extension like that, or a basic trend line or median line, that again suggests that you're getting waning momentum. Okay, so to answer your question, Michael, I would agree that the wage growth numbers, I wouldn't say would matter most. I would say if the number comes in at expectations, if we get a 190 or 200, 180 print, then more emphasis will be on the wage numbers or the wage growth. And if that is weak, yeah, it'll be a bad print. Even if we come in at expectations, if we get weak wage growth, absolutely it'll be a bad print. Okay, and on the flip side of that, if we come out with a really strong number and the wage growth numbers are in line with expectations, I still see the dollar falling. Maybe it pops up for a little bit, maybe you get recovery back to 12,123, then it turns. So does that help, Mike? I don't want to go over all the scenarios of if this and if that because, we want to make sure that we're just staying as objective as possible. But to answer your question, yes, the wage growth numbers will be increasingly important if the number is a miss, if the headline number is at expectations. If it's a miss, then obviously, if it missed the downside, that's going to be really bearish for the dollar. If it missed to the upside, not going to be a major market mover unless the wage numbers are moving with it. So let me just put this way. If we get like a 250 print tomorrow and wage growth surges across the board, yeah, look for a really sharp dollar reversal. I wouldn't think it's still going to thwart the whole trend. We're still moving lower, but the near-term reaction might be a little bit more stern to the upside. Mike says, absolutely. All right, cheers on that, Mike. Eileen says, yes, with you and Jamie, I'm standing next to you in the pit per Charlie D. Stand next to the big dog. Cheers, Eileen. All right. Love the enthusiasm, guys. So tomorrow is going to be an exciting day, and certainly we'll get you updates on the SB Squawk feed as those come through. Any questions on the euro, sterling, or the dollar? So for the pound, again, heading into this near-term resistance, might get a kickback, looking to stay constructive. Broadly speaking, above 44.80 at this point. I think yesterday we cited bullish invalidation at 43.89. We're going to raise that up now. Oh, 44.43, excuse me. Or basically the 44 handle. We're going to raise that up at this point to right here, this confluence region. So from yesterday's report, we're moving the bullish invalidation level to 44.80. That's the 100% extension off the low. But more importantly, it's a host of confluence trend lines here. Basic lower median line parallel, and then a basic trend line resistance turn support, all confluencing right there, heading to the close of the week. Also, I wanted to ask on that sterling fib extension, taking the third high for the day rather than just using the first. So this, Eileen, I'm not sure why. So guys, when you were looking to take extensions, we want to use the extremes in price, right? So you want to use either an extreme low, high, low if you're bullish, or if you're bearish, you want to use the extremes on the high, low, high. So we're bullish here. So on this extension, you're going to take the extremes, the low, high, low. Where else would we take this, Eileen, from? You might be thinking like this. Sure, I was looking at this extension as we were making this rally, but now that we've completed an entire pull up, rebound, move down, and reversal, now this becomes the focus, right? So you want to take what's encompassing more price, Eileen. We want to take the extension or the retracement that's encompassing as much price action as we can to get that in. Do you put any particular emphasis on the candlestick patterns? And if so, what sort of time frame, says Gary? Gary, only on the daily time frames, my man. And Maze, I don't put extra emphasis on anything. Okay, I take everything as a grain of salt in my decision-making process. Price action is what speaks most. So RSI is a tool. It helps us trade. It helps us ascertain timing for when trade is moving or turning over. As far as candlestick patterns, they can be helpful, especially on a daily chart. You put in a doji. On dollar yen, we put in a yearly doji, right? Really, really weird. So these things, yes, absolutely. I pay attention to them. Do I put emphasis on them, Gary? No. Because I can show you a million dojis that did nothing. I can show you a million hangmans that did nothing. I can show you a million outside reversal candles that did nothing. But when these formations are evident with our bias, then I'll pay attention to it. So Gary, if I'm looking for a short trigger in the sterling as we head into 146.85, and we see it put in a couple of dojis, long-tailed, candlesticks, and we're at resistance, and I get a short trigger, yeah, that trade I might press a little bit heavier with the leverage because now I have all these indicators lining up with me. I have a candlestick pattern. I have a momentum trigger that's given out. I'm at resistance. Makes my whole trading plan whole, right? Holistic. Where people who trade strictly with candlesticks, oh, there's, a morning star or something, and they just put in trade based on that. I'll never do that, guys. Price action is what speaks the most. Hussein says, I'm mostly listener. I love your style, the way explaining. I like to know about the S&P, please, says Hussein. Cheers, Hussein. It's a pleasure having you on board, sir. So the S&P, we'll take a quick segue. If there are any other questions from yesterday's scalp report, let me know. That was the euro and the pound. We'll go over the intraday radar charts in a moment, but let's check out the S&P for Mr. Hussein. Here's Kiwi CAD, by the way. This was presented on the scalp charts or the radar charts 2 days ago. Still holding that formation really well. Been snipping at it here, but nothing too major. The SPX looks like this. Gary says, okay, cool. Many thanks for your explanation on candlesticks. Cheers, Gary. And again, I don't want to knock it, man. Don't get me wrong. If you take the MTA, you'll learn all about the candlesticks and the different formations and all this, and they can be helpful. But like I said, only helpful when they're being identified at areas that match up with my bias. So I'm at support, I'm at resistance, and I see this candle. I'm at resistance and I see an outside reversal candle like we did on the second day of December. This is one that I paid attention to. An engulfing candle, whatever you want to call it. There's a million names. But basically the range took out the previous day's range. It's a reversal outside day. Was the onset of the decline. So these kinds of things you'll pay attention to. But other than that, like a tail like this, big wick tail, right? Yeah, next couple of days look higher. Make sense? So Hussein, as far as the SPX, listen, this thing's a chop fest, I think, at this point. You will make, my humble opinion, we'll still make another low here. But the correction might have a little bit more to go as we open up. So again, there's a nice doji right at the highs to open up the month. Wouldn't be that big of a bullish stance, but you could get a rebound. Again, you see the sliding parallel? And again, price action is really messy with the wicks. Remember, bringing it to a line chart to get more clarity. Resistance, 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 break, should be support again on the way down. Got a big wick here, holding still below that median line. We came right into it, tried to break through and failed. So I'm not too really keen on doing anything with the SPX right here. I think that you have a really impressive opening range for the week, essentially because it's been the last 2 weeks the same range that we've been looking at. 118.76, loosely speaking, and the open for the month, which comes in at the close of that first day of trade, and that's basically 1935. $19.36. So just a couple things to look at, Hussein. Resistance still holding in momentum on that whole entire decline off of the highs from November. Let me see what this looks like on a... Ooh, okay. So there's one right there. So here's, okay, this is what I would say. Here's your weekly open, right? This is a 2-hour chart, by the way. Your support is still that same support I just noted, that soft support at 1876. Resistance, I'd be looking at this formation here. Let me make it a little bit different of a color. Okay, this pitchfork right off the low from last month, the lows, I guess, from last month. It looks like it's following this slope pretty well. So stay constructive above that median line off the lows. Median line resistance coincides really beautiful, actually, along that 50% retracement. That's 1963. Nice area of resistance I'd be looking for initially here. So from the intraday standpoint, those are the levels I sort of be focused on. Resistance 1963 on a breakout, or based on time, if we stay in this, you can still stay in it until next Monday is when they converge. But on a breakout scenario, 1993, 1999 would actually be the next level up. Hussein, does that make sense on the S&P? Does that help? I don't typically scalp this. Again, we can't trade CFDs here stateside unless you have access to a futures account. But also can help us gauge risk very well. So certainly on all the indices, it's very important to know what's going on in the broader risk markets. In fact, just to show you what's going on in overnight trade, you know, risk markets at this point are really mixed. Sort of, again, that hangover effect from really large volatility days. You had Asia, which was mixed on the session. You had the Shanghai Composite finally coming up about 1.5% to the upside. Nikkei still some losses there, down 0.85% on the session. Looking at Europe, really mixed picture. You got the CAC down almost 1%. You got the DAX down 1.45%. FTSE 100 UK markets pretty much flat on the session. So again, that conviction on broader risk sentiment, not really there yet today. And I think you're going to see that start to continue to be the case as you head deep into the night and into tomorrow's non-farm payroll print, where again, we'll be looking not only at the headline figure, but you called it right off the bat. Was that Gary who was talking about the wage inflation numbers? That's going to be absolutely critical as well. Hussein says, thanks, you're more than welcome. Gary says, like all of us, I'm just trying to find the most reliable tools for trading. In the end, risk management seems to be the king. It's cost me a lot of money to find that out. Yeah, Gary, everything starts with risk management, man. And just, I don't want to get off topic here, guys, but there's just a reverence and respect you have to have for the market to do this effectively for a long period of time. You know, the guys who last in this game, and if you saw that, again, that video that Jamie posted, Charlie, the guys who last in this game are not the guys who are looking for the home run on every trade. They're the guys that respect the market, and when I'm wrong, I want to be wrong little. When I'm right, I want to be right big. So risk management is everything, is paramount. One bad trade, guys, could undo, specifically with a strategy like mine, where we're trading so high volume of trades. Specifically in that kind of strategy, one bad trade could undo the last good 10 trades if I don't have proper risk management. So it's all about, making sure that you have enough to withstand the move against you, and knowing when you're wrong and being able to take a stop. No one's going to be happy when they take a stop and like cheer for joy, but taking that stop, knowing that, whew, okay, that could have gotten worse. Let's reassess the scenario. Okay, it sucks to take a stop, guys, but if you're going to take it in a very hard format, it's going to be very hard to make it in this business. You really have to take it in stride and keep your options always looking to the next opportunity, as well as always looking, watch my back, right? Watch my back. If the market moves against me, what's the worst that can happen? Any trade I get into, what's the worst case scenario? I want to have my stop well inside that. All right. Gary says I'm using MT4 platform. Works okay for me, but I can't seem to view treasury yields. Any advice? Maybe I just can't find it on the platform. I'm not really sure if MT4 has treasuries. I thought they did, but I personally don't use it, Gary, so I couldn't help you on that. If there's a specific treasury yield you are looking for, we can always bring it up here. I have the terminal for Bloomberg. We can bring up any yield you want, my friend. So here's the U.S. Sort of yields that we're making on all of the generic T-bills, as well as the forward contracts. But you look at the bonds here, 10-year down 0.29% today, 30-year down 0.2% today. I mean, these are going into levels not seen. So here's what it looks like. This is the 10-year, guys. Last time we were at this mark, it's back in 2010. Early 2015 in February. And that decline maxed out at 1.64%. In fact, and again, we're getting off topic here, but looks like it could be coming in some support here, just some basic support for treasuries. Wouldn't be outside the realm of possibility, right? Specifically with looking at the dollar index coming on support. So it might be a little bit of a rebound there, as both of those kind of give us a little bit of a test of a near-term support target. But you get the picture, right? The reason I want to see the T yields because it seems very relevant to the dollar yen. Treasuries, why mortgage rates really sweet right now, says Eileen. So let's take a look at that. Dollar yen. I still have a couple pairs that I do want to cover, guys, but let's just take a quick segue here because dollar yen is going to be very relevant heading into non-farm payrolls. Here's what the daily chart looks like first. And you thought volatility was bad in the indices. Look at this. All right, so the abomination, I'm sure, ripping people's face off with these moves. Still going to highlight key near-term support along that median line, but more importantly at the 1618 extension, that's 1646, kind of dabbled on that. And if you look at this on a closed basis, actually, guys, we were all over that extension. Holding really close within here, all those wicks into that extension, all of them closed well within the confines of that. So that would be the initial support target you'd look for on sort of a drop down or a continued move lower in the dollar yen. Here's what the 30 looks like. And Gary says, nope, I'm winning. Right on, my man. Good stuff. Oh, about the people getting their face ripped off. Yeah, I haven't touched this. I've missed this entire move here on the yen. Don't forget, last week and even into the start of this week, we were playing this really aggressively through Aussie yen, and that was one of the pairs I also wanted to cover today real quick. So here's what Aussie yen looks like on the daily charts, guys. I just want to note that we're at support within the confines of the ascending channel that we were talking about both last week and early this week. Um, here's what near-term chart looks like for Aussie yen. Okay, there's that formation. You saw a little bit of a dribble there, but we're right back within. Okay, so as long as we stay above that median line formation, you want to be cautious. I am still looking for short triggers. I do favor the downside. If you look, again, since the start of the week, momentum, failure at 60, failure at 60, failure at 60, failure at 60. Okay, looking for short triggers, making sure to keep that target inside 45 pips. None of the levels have changed except for this retracement. I don't even want to use that 38.2 anymore. All right, I'd be looking at those levels there for the Aussie yen. So a way you can take advantage of some yen strength without having to necessarily play dollar yen to the short side. I think the dollar short is a great position, as we talked about early in the session, but with the dollar index at support, that might be waning a little bit heading into tomorrow's non-farm payroll. So to avoid sort of that dollar dilemma, especially if risk turns over here into the U.S. trade session, Aussie yen on the short side, still favored, looking for 84.12, 86, 83.63 again, and then the 50 comes in at 80, 82.78. And again, just to walk you guys through the mind process, through the mechanics of it, if we get a downside break, and I have some conviction that this is a concrete near-term high, okay, there's that trendline resistance. We broke above it, sat on it as support, and now we're just using it as a pivot, right? So if we do break down from here, then you want to tack on a quick extension and see if you get any overlap. High, low, high. And if you do that correctly, these confluences are your best shots. 100% extension off the high, 618 retracement off the low, favored plays. Okay, so that would give you downside targets again, 83.63, 83, 82.78. Remember, 45 pips per scalp is about what we should be looking for. And I just want to take a quick caveat on that because I know we reviewed with you guys a couple of Euro Aussie trades I took this week that didn't quite get the full 75 pip ATR. So Mike, why are you telling us to take a quarter of the ATR if you're not doing it? Guys, this is a guide, okay? If the trade is coming into resistance, I don't care if you have a 10 ATR or if you have a 100 ATR. Resistance is resistance. So on the trades that I took on the Euro Aus, on that first resistance level, I closed out a portion of the trade. I didn't jump out completely. And I bring the stop to break even. So now I'm playing with the house's money. I'm guaranteed that portion I've already locked in. If it moves to my entry point, no biggie. If I still like the trade, I'll jump right back in, right? But when we're looking to scalp, the mentality we're taking is that your biggest risk in trading is exposure time to the markets. The longer your position is open, the more exposure you have. It's just directly equatable, right? So just keep that in mind. All right, so let's move right on. Are there any other questions on the Aussie yen? I just want to take a quick touch on some of the trades that we covered earlier in the week. Aussie dollar invalidated the short side with a break above the invalidation level. So here's what Aussie dollar looks like, and here's what Aussie looked like earlier in the week. Okay, so we had made a break of the initial weekly opening range to the downside. And when we talked yesterday in the webinar, we were sitting at that 618 retracement. Again, we've made a new high, so this retracement is no longer on this chart. But we came back, we sat on that 618 retracement, and we said, hey, look, we broke the opening range of the week to the downside. So as long as we stay below 70.37, we're bearish. Okay, the bearish invalidation level, if you remember, was 70.50. It was right here. So as soon as this thing clears 70.50 on the stretch to the upside, it invalidated our bias. 70.50 was that swing high. Oh, there it is, 70.50. Invalidated the short bias. And then we've been trying to get long since, and I have not been able to. There was an opportunity last night. I was kicking myself before going to bed on this pullback right here into Asia trade. I thought you were going to get at least a tag of this median line before we start to move off. We didn't, right? And actually, you had a really nice consolidation into the European Open, which saw a break of the European opening range to the upside. So all I want to say on this trade is if you're holding longs, well done. Look for 72.47, 72.50 as the initial area of resistance. Major key resistance on the near term. Beyond that, I would still put right here. A 1618 extension off the low, 72.71. Dead on confluence with a bunch of median lines. Median line parallel here and the upper median line parallel for formation here. Interestingly enough, this formation of the low is the exact same slope as that formation. Let me zoom that out for you. So two pitchforks, right? Both using clean reference points, almost the identical slope. So might have some more upside to go. I do expect to get a pullback of which we'll be able to get back on the long side, but near term, look for this stretch into 72.50 to 72.70 at max into today's trade session. Again, this actually might be an area of a decent short. You're getting divergence heading into that high, so I don't have any real crazy triggers jumping out at me. I'll put that there for reference. But let's say you make a spike into this high and you finally get a break of that downside trigger. Might be a decent scalp for a 27 pip move to the downside. Sure. Again, counter trend. If we're trading counter trend, half leverage, make sure you're adjusting your leverage accordingly. Any questions on Aussie? Again, feel free to take a snapshot. All these levels are the same as last night's report. Or actually, excuse me, just the retracement's different from that low. We're using the new high now. Okay, that's Aussie dollar. I do want to just touch on Aussie Swiss. I know it's a weird pair, but we highlighted it on Sunday night when we were covering all the Aussie crosses. Look, it's basically still in the weekly opening range, and that's basically what I just wanted to highlight. Really clean weekly opening range, just above support, just below the key 618 extension. Look to clear this range. I favor a move back towards this sort of region here, or even a break lower into here to offer some entries on trying to get on the long position. Other than that, you're looking to play this range until we get out. The reason we were looking for the pullback is because that embedded structure that we were looking at on Sunday broke. It seems just like the pullback doesn't have enough juice to get to the downside to make even a 38.2. So look for a resolution of this range. Bullish invalidation is right at the 71 handle, and that's Aussie Swiss. Euro Aussie still respecting levels and giving great opportunity, says Mario. Absolutely, man. Euro Aussie's been the trade I've been in most often this whole week. All told, I took so many round trips on this. So here's the one thing I didn't like about yesterday's price action on Euro Aus. I didn't like the fact that we're kind of sailing through this trend line, and I'm thinking about getting rid of it. This December trend line off the lows. It's better seen on the daily chart right here. Mario says, I know. I was looking at longs yesterday. I got 177 pips. Well done, mate. And, man, this is the pair to do it on. If you guys are comfortable, or if you guys have been trading with me here on this strategy for a while, you know, a pair like Euro Aus with a daily ATR of 288 pips really offers a lot of volatility. If you're confident, you know what you're doing with the strategy, it can definitely be a nice play. This was the major reversal. I haven't played anything necessarily since that pullback, found some support at that median line or at that basic pivot. What was it? 54.40, I think. Yeah, 54.40. So ever since we came to this last night, I haven't taken any new positions. I still like the long side. Although we broke that December trend line, I'm not thinking that there's too much emphasis on it because we continue to kind of straddle it. This is just a basic formation, though, that we were looking at off the low. So I'll pull back into this region with a nice topside trigger. Might be the play to get us on the long side again. I don't know. I think on this one from here, we have to be a little bit more reserved because we're seeing both Euro strength and Aussie strength. Don't forget. But on a relative basis, if we just look at it on a relative basis, Euro strength way outweighing Aussie strength. So still leaving an upside bias there on Euro Aussie. Mario says your report on Sunday night on Aussie pairs was great. Thanks. Cheers, Mario. I appreciate that. Hope you're able to take advantage of some of those setups. Last but not least, I just want to touch on Aussie Kiwi, touch on gold, and we'll move right on to that. Here's what Aussie Kiwi looks like. Beautiful trade that we've typically been all over. I know on the swing side of things, you guys got stopped out of that long position yesterday, I believe. But here's what it looks like on the daily chart if this thing wants to open. Here's what I just wanted to show you. Here's what I just wanted to show you. For me, a close above 107.23, 107.20 was huge. And I even, I think I was talking about this yesterday in the webinar, and we were saying, look, this is a pretty big support confluence. And not only is it a 618 extension, forget that. Not only is it a 50% retracement, forget that too. It's also upper median line or a sliding parallel of that same operative slope we're in for months. Acted as support on the rebound and break below. This purple line that you see here in magenta is also the 2016 open. So isn't that convenient? When you come back, find the open of the year to offer support. And this a lot of times, me and Jamie throw this back and forth all day. Hey, by the way, and they can tend to be very, very strong signals. So you came into the yearly open, you defended it as support, you closed well within the confines of this formation and will continue to favor this formation until otherwise noted. So unless we get a close below 107.20, I'm looking higher. Last but not least, we didn't cover, I almost forgot. Sorry, from yesterday's radar charts, did we cover the Kiwi, guys, early in the session? Here's what Kiwi dollar looks like. They say not yet. Okay, cool. Here's what Kiwi dollar looks like. Here's what we looked like last night. So if you remember, we were talking about the trade remaining constructive while above 66.14. Near-term resistance was right at that 66.77 level, but we were looking for a stretch higher, and we were looking for that stretch to take us into what is that, 64 or 65? Where was it? I'm sorry, it's right here. 67.16 was the first target. That was this right here. 67.16 was also important because it was the 200-day moving average, the upper median line parallel, and the operative ascending median line was right in that region. So we're holding above it right now. The next major area of confluence resistance is right here, 67.55 into 67.59. We had that last night as the backup sort of next secondary target. I personally think I want to be very cautious about getting aggressively, specifically long on the Kiwi. I think if anything, this one starts to simmer down more so than necessarily the Aussie might. But keep in mind, I mean, it's testing a pretty big resistance range right here. And if we close above this region, it might be the onset of something bigger. Here's momentum, has not cleared 60. So as momentum comes into 60, we'd expect to see some resistance in price if this is still bearish. But the sheer confluence of all these things right in that region has been kind of sitting on the sidelines here for Kiwi. You want to see today's close below that region at 67.12, 67.15, or whatever it was, 67.16. You want to see a close below that level to be able to start looking at least for a near-term scalp to the downside on Kiwi dollar. Again, a pair like the pound where you haven't even made it through the yearly open yet, that's a 68.27. So still unlike the euro. So in the case of dollar weakness, we're still going to favor the euro more so than the pound or the Kiwi. We're still going to favor the Aussie more so than the pound or the Kiwi. Okay, so just keep that in mind as far as the dollar crosses are concerned. I do want to take a moment just to touch on dollar CAD. I believe we were talking about that here in the room yesterday. Someone was asking me about it. And I kind of just want to take a quick glance at it here today. Actually, I have not checked it out this morning yet. Let's see what's going on. Oh, it broke. Okay, 37.16 to 37.50, big region, 50% retracement off the ascent off the October lows. This is a 100% extension from the decline off the highs that we made last month. Wow, this was big, and you also had a trendline resistance turn support right there as well. So I was really interested to see if we closed above that yesterday or not. We did, and I want to see if we're going to get a rebound. Doesn't look like we're gonna. Next downside target is right here, 35.40, 35.39, 100-day moving average, the key 618 retracement lower down. Okay, resistance 37.60, bearish invalidation 39.80, 39.70, 39.80 right here. Questions on Kiwi? Okay, a quick touch on gold. We are over on time here, but can't go without giving you guys an update on what gold is. Specifically, I'm throwing this in the face of all those guys who are still hating on the gold forecasts as of late. We've been putting bullish forecasts on daily FX all month, but not everyone's liking that trade apparently. Here's what it looks like on the daily. I think it's pretty clear that we got a breakout. I'm not really sure what they're looking at, but here's what the technicals say, guys. The break that we saw last week was legit. The break above the 200-day moving average this week was sort of the last stone. This was sort of the last region of resistance, last area of that you would expect to see hold if this was going to turn over. We plowed right through that. Key confluence, 100% extension, 618 retracement, got broken easily yesterday. We closed just below that sliding parallel. Now looking higher, obviously ahead of target, but the target was that 153, I think it's 154 and change. $11.55. Any questions on gold? So very similar to the dollar in that, look, we're at resistance. The dollar is looking at support just lower. You could see this stretch a little bit into resistance. You could see the dollar stretch a little bit lower into support. But I don't want to go chasing here, okay? If we close above this and we don't get a chance to get in, so be it, guys. I'll miss, a lot of trades throughout the course of the day just because I refuse to jump in and chase. I'd rather miss the opportunity and look for a fresh opportunity with proper risk management than try to chase this. So long story short, you're looking at resistance here, a break, and there's really nothing on tap until that confluence up at 1177, 1176. That's the reversal day close there. It wasn't a reversal day, but it was a close. 50% retracement, 1618 extension off of the high, or off the low rather, on the advance. And a pretty big pivot in price. So gold levels, again, rather clear. Maybe look for a stretch higher into US trade, but I'll broadly be looking for a pullback here to get back on the long side. All right, and US markets have been open for 5 minutes, guys, so I got to run. I want to thank everyone who attended. Eileen says thanks for the details, explanations, cautions, your experience. Have a great end to your week. See you next week. Same to you guys. Look, use some caution heading to the non-farm payroll report tomorrow. We're just closing out the first week of February trade, and I just want you to keep the powder dry. So we'll just make sure that we're being a little bit more cautious. Look at those wage inflation numbers. We'll be talking to you on SB Squawk. And as you head into the Asia session tonight, look for volatility and specifically thin market conditions as volume starts to really thin out. And then obviously 8:30 tomorrow, we'll be giving you that report, or we'll be giving you that NFP number the second it hits the wires. Best of luck trading, guys, and we will see you next week. Cheers.